Hello, my name is Travis Stewart, and I'm with Agri-Business Insurance Services. I come before you guys today to just kind of talk a little bit to replant, late plant, prevent plant, first crop, second crop type provisions when it comes to crop insurance, some of the decisions that are out there and some of the rules that might affect you as you're making your decisions now that we're past, in most cases, the final plant date on our first crop being corn. A couple of things before we get started, just remind you guys, we don't discriminate. We are an equal opportunity provider. And then also, even though we make every effort to ensure that the information that we're about to present is correct, naturally, all information is subject to USDA rules and regulations. Real quick, replant. So the first thing on our agenda, qualification. It's only available on revenue protection with the harvest price excluded, and yield protection type policies. We must meet the 2020 rule. That would vary by unit. So for enterprise units versus optional units, it could determine a difference in how we determine the qualification for that 2020 rule. The crops must be planted after the initial plant date, so the early plant date, in order to qualify for that replant coverage. So I'm going to pick on in Minnesota, for example, April 11th is our early plant date. If the crop had gone into the ground prior to April 11th, there'd be no replant coverage on those specific acres. Then the last part of it, acres replanted must appraise at less than 90% of the unit's guarantee. So for example, some of the later planted corn this year, I've been hearing a lot of conversation about stand counts below 50% of the planting population. So that, in that case, that would qualify for a replant if the producer decided to replant. The last point here is, and this is a new rule that came out a couple of years ago, during that first 10 days of the late plant period, so right after the final plant date, so again, picking on Minnesota, May 31st, from June 1st to June 10th, the companies could determine it to be practical to replant. And if you have a situation where replanting is required, you must do so within those 10 days. Things like excessive moisture, so on and so forth, could prevent you or determine when a scenario is impractical to replant during that first 10 days as well. Payment's pretty straightforward. Corn, 8 bushels times the price, times the acres, times your share. Soybeans, 3 bushels times acres times price times share. Wheat, 4 bushels times acres times price times share. Pretty straightforward, pretty standardized. If it's less than 50 acres, in most cases, you can also do a self-certified replant, and you only get paid once on those acres. So if you have to replant the same acres twice, you're only going to get paid the first time. So for a quick example, we've got a submitted loss of corn replant for 40 acres. Projected price is $4. So you get paid 8 bushels times 40 acres times $4 at 100% price. So his payment would be $12.80 for the entire indemnity. Or if we took a look at it on a per acre basis, 8 bushels times $4, you'd be getting paid $32 an acre. Late plant period, late planting. So in most cases, we're now into the late plant period for corn. Soybeans in the bulk of the upper Midwest, we've got June 10th. But again, depending where you're at, that date could vary a little bit. But during the late plant period, if you decide to continue to plant that crop, we're going to see guarantees reduced 1% each day planted. Premium is going to stay considered the same as if it was timely planted, but the guarantee is going to be reduced. And that late plant period can vary by crop. Some crops have them, some crops don't. So kind of give you an idea, we see that reduction in guarantee by 1% per day. The maximum late plant period is 25 days. And again, like I said, in some areas, so we got Missouri corn, for example, is 20 days versus 25 days. Guarantee reduction. If the crop could not be planted after the late plant period, so once that late plant period is expired, you're basically going to receive your prevent plant guarantee for that crop. So again, picking on corn in Minnesota, if we were to plant corn after June 25th, that corn would then receive 55% of its guarantee. And if you had the applicable 5% buy-up, it would then be 60% of its guarantee. And that would become your new insurance guarantee for the remaining of the growing season. When reporting late plant acres, it's really critical that we report those specific acres separately, line by line. So the example I've got here is if we had an 80-acre field, 40 acres were timely planted, we'd put May 9th, the last date those 40 acres were planted. And then we've got 20 acres we planted on June 1st. We'd want to make sure we report those 20 acres separately, and then the remaining acres planted on June 5th. So then taking a look at that scenario, there'd be a different guarantee calculated for each one of those acres. So kind of paint that portrait here. We've got 100 acres of corn, 100% interest, 180 bushel APH. You can see that we took each delay and calculated the respective guarantee accordingly. So even though we've got the same amount of acres, the late planted crop was reduced from 28,800 down to 25,920 on those specific acres. Prevent planting. So real quick, this is probably the hottest topic out there this year. If we take a look at prevent planting, what prevent plant is the failure to plant the insured crop by the final plant date, designated in the special provisions for the insured crop in the county or within any applicable late planting period due to the insured cause of loss that is general to the surrounding area and that prevents other producers from planting acreage with similar characteristics. Failure to plant because of uninsured causes, such as a lack of proper equipment or labor to plant acreage or use of a particular production method, is not considered prevented planting. So with prevented planting coverage, typically any revenue protection, yield protection policy comes with standard prevent plant provisions. So for example, allowing for prevent plant coverage to be 55% on corn or 60% on soybeans with a timely planted full crop guarantee. We also see some APH plans out there to allow for prevent plant coverage too. So for example, potatoes, dry peas in some areas, sweet corn, green peas, some of the other canning crops as well. And additional prevent plant coverage elections can be elected as well during the sales closing time, or the sales, basically the sales or the renewal time. So by the applicable sales closing date. So for example, on corn, we could have chose to elect an additional 5%, bringing us up from 55% to 60% of our guarantee for any prevent plant acreage. That additional prevent plant coverage election option must be, like I said, elected by sales closing date. The option is continuous, so once it's added to the policy, it stays on. The one thing though to take into consideration, and this is a great year for example, companies do have the right to reject or deny that additional 5% if they feel or show and can show that the conditions existed when the insured elects the option that could increase the likelihood for prevent plant. A couple of other things to consider when it comes to the prevent plant discussion: eligible acres. If you're a brand new producer or this is the first year you're planting that crop, you must report your intended acres at the time of application in order to receive prevent plant coverage. Those intended acres now set the maximum eligible acres available for prevent plant purposes, and there is an exception to this when transferring in another producer's history. So for example, dad's already got established eligible acres, but he's transferring farm to the son. The son would then be able to utilize dad's eligible acres that were transferred over as part of the history. Carryover and continuous policies. In the simplest of sense, we're going to take a look at the highest planted acres of that crop in that county in the past 4 years, and that's going to set your maximum eligible acres by crop. And in order to qualify for prevent plant on those, especially in like the prairie pothole region, you must have successfully planted those acres one in the past 4 years. Good thing to note there, if we do exhaust the eligible acres of the one crop, so for example, we use up all the corn acres, however, we still have more prevent plant corn acres that are out there and have been declared prevent plant corn. Those remaining acres that could not fit within the eligible available acres would then roll over to soybeans. Eligible acres must also be insurable. Basically, at the end of the day, if it's an uninsurable acreage, we're not going to include it as prevent plant. So it's got to be free of trees, rocky outcroppings, things like that. And then as well here, you can see if it hasn't been planted, harvested, or insured in any of the past 3 years as well. When it comes to notification of loss, there's been a lot of discrepancy out there in the industry on this, so hopefully we can add some clarity. Crop insurance rules state that you've got to notify your agent within 72 hours of either the final plant date or when the insured determines that they will not be able to plant the crop by the end of any applicable late planting period. So in the shortest of sense, if you decide you're going to continue to try and plant that crop into the late plant period, you basically do not have to give notice until you decide you have you'd no longer like to attempt to plant that crop during that late plant period. At that point, then that 72-hour timer would be set. When it comes to acreage reporting of prevent plant acres, PP acres need to be listed on the acreage report separate from any timely planted and late planted acres by crop. Prevent plant acreage reporting deadline hasn't changed, still July 15th. And then, like I said, for a new producer, somebody that has not planted the crop, the most recent 4 years, they still need to report that preliminary or intended acreage report. Quite often that's a part of the application process, and there's a column that can be listed right there to include that. Eligible acres. Another thing to keep in mind, prairie pothole region, kind of touched on this already. There's no prevent plant coverage for acreage emerging from CRP for the first insured year. The reason that's the case is that crop must have been, or those acreage must have been successfully planted 1 out of the past 4 years in order to be eligible for prevent plant in the prairie pothole region. Enterprise unit qualification. One thing to note here, I don't want to get too lost in the weeds because everybody's scenario can be a little bit different here depending on your total acres, how many sections you're in, your policy election, so on and so forth. But one thing to note is your total prevent plant acres and how many acres are declared prevent plant could potentially create some consequences to your qualification for enterprise units. So for example, if you were intending to be enterprise units this year, but you had 95% of your crop prevent plant and the remaining 5% is only in one section, in that case, you'd no longer qualify for your enterprise units and you'd be subject to your optional unit premium. So you would lose out on that enterprise unit premium discount. Make sure you talk to, give us a call, talk to your agent, really go over some of the specific details in that regard, just to see how that might be applicable to you if there is a concern. The other thing to keep in mind is if you're adding land to the operation during the year of prevent plant, in most cases, we're going to have what's called an added land factor that can be determined. So basically, we'll take the current crop year acres divided by the previous crop year's acres, and that'll give us our added land factor. And then we can take each year's of eligible acres and come up with the increased number of eligible acres by crop. So for example, I think I've got an example here. Looks like I might have got rid of it. So for example, if we had eligible acres in this operation, we would take corn by 120%, soybeans by 120%, if we had wheat by 120% as well. Acres that are not eligible for payment. So if we didn't meet the 2020 rule, there'd be no prevent plant payment on those acres. Any crop is planted during the late plant period or before the final plant date. So if you get the crop in the ground, we're not going to pay prevent plant for planted acres. If you've got volunteer cover crops that are going to be hay or grazed or harvested during the late plant period or before the final plant date, that next crop would be uninsurable, so no prevent plant acres on that as well. And any acres in excess of the total maximum eligible acres for all your insured crops. Basically, we can't get paid prevent plant on more acres than you actually have in your operation. A couple things when it comes to APH consequences with prevent plant. So a truly prevent plant acreage that the only thing that's going to be put on there after it's declared prevent plant is like a cover crop with no intent to hay, graze, or anything of the sort, or excuse me, with no intent to take a crop for grain or harvest the crop, but maybe haying and grazing, which would be acceptable after November 1st, there'd be no APH consequences. If you did plant a second crop on those failed acres or those prevent plant acres, and that acreage does not qualify for double cropping, then you would receive a yield equal to 60% of your approved yield on those specific acres for the first insured crops, basically an assigned yield. So in that case, there would be an APH limitation. So for example, if you had failed corn or prevent plant corn, and you decided I'm going to plant soybeans out there after the end of the late plant period of corn, you could do so. We'll get into an example later on that shows where your prevent plant payment would be reduced to 35% of the full prevent plant payment. And then that's where this APH hit would occur. So in most cases, if you're planting a cover crop, you have no intent to harvest the second crop that's going to go on the prevented plant acres, or you're only going to hay and graze it after November 1st, there are no implications to your APH on those specific acres. A couple more things on second crop after prevent plant. A couple things that you have for an option. Naturally, not plant a second crop. Get 100% of your prevent plant payment. Throw a cover crop out there. That's fine as well. Plant and not insure the second crop. So even if you plant that second crop, you decide not to insure it, your prevent plant payment and premium on the first crop are reduced to 35%, or you can plant and insure a second crop. In that case, same thing, the prevent plant payment and premium would be reduced to 35%, and then you would be responsible for 100% of the premium on the second crop, and you would still be eligible for 100% payment of any loss that were to occur on that second insured crop. Guarantee calculation. The standard corn prevent plant guarantee is 55% of the unit guarantee to which the prevent plant acres are attached. Simplest sense here, we got 150 bushel APH yield, 85% coverage level. It's 127.5 bushel guarantee. So your prevent plant would be a 70.1 bushel guarantee. And at that point, if we've got a spring price of $4, 70.1 would pay you $280.40 per acre for that prevent plant. If it were increased by 60%, we'd just simply take it up to 60%, or like soybeans example, 60 to 65%. Payment limitations: you'll receive your full 100% of prevent plant payment if the land remains idle, you put a cover crop out there but it's not hay or graze prior to November 1st, or if you're in an area where double cropping is an insurable practice for that crop and county. Again, if you put a crop out there, payment limitation is going to be 35%, premium is going to be reduced to 35%, and then that second crop would have to be planted after the end of the first prevent plant crop's final late plant period. So a couple of examples as we kind of close this thing out. First example here, determining eligible prevent plant acres. So Joe produces, has a farm, 1,100 total cropland acres, all in corn, soybeans, and wheat. On the table on the next slide are his total acres reported by crop for the most 4 recent years. So what we're going to want to look for is A, what are his maximum eligible acres by crop for this year? And if Joe were to pick up 300 cropland acres for this year, what will his maximum eligible acres be? So this would be perfect to kind of get the first base understanding of A, how many acres do I have available to get paid for prevent plant, and B, if I added land to my operation, what could that payment look like? So as you can see here, if we take a look year 1 through year 4, we've got corn 550, 650, 625, and 700, soybeans 325 plus 75 pp, 350, 375, and 300, and then wheat 100 acres consistently each of the 4 years. So for our first answers, we look at eligible acres. Year 4 is our highest on corn at 700, and year 1 is our highest on soybeans at 400. We would include both planted and prevent plant acres when determining our total eligible acres. And then wheat being consistent at 100 is just simply 100 acres. To come up with the added land factor here, if you guys think back to our earlier slide, we're going to take the current acres, which would be 1,400, divided by the previous year's crop acres at 1,100. We've come up with a factor of 1.273. So we've taken each year's eligible crop acres, multiplied that by the factor to come up with his new eligible acres. So for example, on corn, we went from 700 to 891.1 eligible acres. I want to jump back really quick here too on determining the added land factor. If you did have additional acres coming in the operation, I guess it's not jumping out at me, but regardless, one thing to keep in mind on that as well, the companies can deny that added land factor if they determine that prevent plant conditions existed at the time that the producer added those acres. So for example, if you didn't add that land to your operation until the end of April, well, at the end of April, in most areas and most crops and most counties, we were already in a high risk scenario for prevent plant. So being able to capture prevent plant coverage on those acres, well, the company may have the right to go ahead and deny that, just like they can deny the additional 5%, right here. Just like they can deny that additional 5% on the prevent plant buy-up as well. So one thing to note, especially this year, I know a lot of land's been changing hands out there, so you want to make sure you take a look at that scenario, talk to your crop agent, understand what the company's position may be, because we have found it varying quite a bit from carrier to carrier this year. All right, jumping back to our examples. Sorry to get a little derailed on that. If we take a look at our second example, so let's talk about eligible PP acres and what those PP payments might look like. So if we've got the example below, how many acres of prevent plant will be paid in the table below. If he's got 50 acres, he's at 725 and 475 and 100. In total, he's below his total available acres to plant. So he should be able to collect his entire prevent plant acres. But next question would be is how will the acres of prevent plant be paid? So if we jump over to the next slide here, he had enough eligible acres of corn to pay 100% of the 50 prevent plant acres that he had. So he had 166 remaining eligible acres, so the full 50 will be covered. On soybeans, though, he only had 34.2 soybean acres left and available as eligible acres for prevent plant purposes. So in that case, the first 34.2 acres of the 50 prevent plant soybean acres will get paid at the soybean rate, and then the remaining 15.8 acres of prevent plant soybeans would roll to wheat. And the reason it'll roll to wheat is wheat would be the most comparative crop available on their policy. And at that point, if for some reason the prevent plant payment on the wheat were to be greater than the calculated prevent plant payment on the soybeans, it would be capped at the highest of the soybean prevent plant guarantee. If the wheat prevent plant payment were less than the soybean prevent plant payment on those specific acres, it would then be paid at the lower wheat payment. So for example, we've got 180 APH on corn, 80% coverage level, $4 projected price. In this scenario, if he got paid on his entire 50 acres and he had a 55% share, his payment would be $15,840 prevent plant corn payment. In that scenario, soybeans, his 34.2 eligible acres would get paid at $86.14, and then the remaining 15.8 acres would get paid at $3,037. So you can see that there's a slight reduction in that case from rolling the remaining acres from soybeans to wheat. If we take a look at payment here, especially if you decide to plant a second crop, we can kind of walk through that scenario. So after the late planting period for corn has passed, Joe decides to plant soybeans on the acres that were claimed as prevent plant corn. In this case, Joe would receive $5,544 of his prevent plant payment on corn. So that's 35% of the initial 100% prevent plant payment. The premium would be reduced. He'd receive an assigned yield on those specific acres of 108, so his APH times 60%. And that would be in his database. Keep in mind, that would be around for potentially 10 plus years, depending on crop rotation. And then Joe will have the option to insure or not insure the second crop soybeans. If he insures them, he would be responsible for 100% of the soybean premium, and he would be eligible for 100% of the applicable indemnity. The other thing to note there is the beans can't be planted until after the end of the late plant period applicable to the first crop that the PP was claimed. So in that case, if we're in Minnesota on corn, he wouldn't be able to plant his beans until after June 25th. I'll leave this up here for a little bit. And you guys are happy to reach out to us. We're more than happy to send you a copy of this as well. It kind of takes you through the first crop, second crop decision flow chart. If it was planted or not, we've got a little bit of a determination to make there, and we can go through and have that discussion. So if it's failed first crop, roll into a second crop. So you successfully planted the corn, but the corn failed. You'd then like to change those acres to soybeans. There's some things we could take a look at on that flow chart. And then kind of leave this one up here too. So the first one we saw was first crop, second crop regarding the first crop being planted. This one would be the decision associated to the first crop being prevented from planting and deciding to plant a second crop. So again, another thing to consider. Reach out to us at the very end if you'd like to get some additional information, or you'd like a copy of these as well. Last thing, if you'd like to learn a little bit more about us, you can check us out online, abisonline.com, ABIS Crop Insurance. You can check us out, cropinsurance.com. Also find us on Facebook, Twitter, LinkedIn. We love to keep in touch. We love to reach out whenever we can. We certainly like to do our best to provide solid insight. So for any reason, if you'd like to ask any additional questions, don't hesitate to reach out to us. You can get our West Des Moines or any of our locations email addresses on our website. You can also get our Mankato email address, otherwise West Des Moines at cropinsurance.com, Mankato at cropinsurance.com. Any one of us would be happy to help you out, provide any insight that you'd like to review. Other than that, happy planting, and hopefully we provided some good insight. You guys have yourself a wonderful day. Thank you.